Hello, everyone, and welcome back to the trading table. Joined with me is Landon, and today we're going to be looking at some of the best long-term stocks to add to your portfolio right now. We have 10 on this list, and we've done some pretty thorough research here, and we are very confident about these stocks that we're going to be listing here today. So jumping into our first one, we have Apple, ticker symbol AAPL. So everyone knows Apple, right? And the goal with this portfolio is you don't really want random companies, right? You want companies that are, pretty big because you're holding them long term. You want companies that have, guaranteed success and they have been successful, right? When you invest in the long term, you're basically investing in the company. So keep that in mind if you decide to, add any to your personal list. But looking at Apple here, we have a market cap of 2.5 trillion. Their price to earnings ratio, if we look down here real quick, is 29.54, right? Or you just round it up and call it 30. So pretty good PE there. And they have a dividend yield of 0.6. This video is not so much focused on dividend yield. This is more long-term growth, right? So we're shooting for percents here. If we jump to the chart for the 1 year, we can see that we're up 10% in the 1 year time frame. 3 years, we're up 51. 5 years, we're up 334, right? So 5 years ago, if you invested in Apple, your portfolio or your holdings in Apple would be up 334%. To put this number into perspective, if you invested 1,000 into Apple 5 years ago, right, you would currently be up $3,340. So great, great long term here with Apple. And you know what? They're going to continue to rise, right? They're going to keep going up. So Apple is a leader in the technology innovation with a strong ecosystem of products and services, right? It has a loyal customer base, high margins, and consistent revenue growth from services like, Apple Music. You have iCloud, you have the App Store, and more, right? They're just releasing more stuff. I mean, if you think about it, a lot of people have iPhones, right? As you can see here, their historical earnings are great. Their revenue is great. So definitely an all-around good company.
Yeah, Andrew. If you guys have been following us for a while, you guys know Apple is one of my favorite long-term holds. But moving on to our next one, we have Microsoft with a market cap of 2.3 trillion and a PE ratio of 35, and even with a dividend yield of 0.8%. That's not the goal here, but it's still nice that the company is willing to pay out a dividend. Microsoft, has diversified its business across everything you can think of: software, cloud computing, gaming, and even AI now. I don't know if you guys have seen the news or in the headlines, they're expanding they're expanding with OpenAI to create their own model, and they own 45% of OpenAI. It's a strong recurring revenue from cloud services and software subscriptions that make this stock a really solid long-term investment.
Yeah, Landon. I mean, Microsoft is just another one of those, tech sector leaders up there with Apple, Nvidia, et cetera, et cetera. And if you notice a trend here, tech stocks are great because the future is technology, of course, and AI. So the fact that Microsoft owns, a part of OpenAI is great. And if we look at their 5 year, 3 year, 1 year, their year to date, I mean, just up, just green, right? So, like I said before, $1,000 in this 5 years ago, you'd have a return of $2,478 right now, which is a great stock. Their ESG rating is AA, which is actually pretty crazy. You don't really see a lot of stocks with that. They don't, once again, like Landon said, they don't have a very high dividend yield, but that's not the goal here, right? We're going for return on investment, or ROI. Jump into our next one now. This one's not so much a tech stock, but I mean, I could see in the future they, delve into some tech. We have Amazon. So Amazon, everyone already knows Amazon. Market cap of 1.4 trillion, PE ratio of 60. They do not have a dividend, but once again, that's not the goal. And everyone knows Amazon's a dominator of e-commerce. They expand into new markets like healthcare and groceries. So they're always really just, diversifying. Looking at the chart here, it's not so much a big mover as Apple or Microsoft, but I will say this one is a lot safer and a lot less, volatile. It is slightly high right now, but the market is pretty high, so not really surprised there. But great ROI in the 5-year outlook, and even the 1-year outlook, great returns. So Amazon is definitely something else I would recommend for the long-term hold here. And Amazon's just always expanding, right?
Yeah, Andrew. I mean, who doesn't get their their items from Amazon? I think everyone orders off of Amazon. Definitely a wonderful long term stock there. But moving on to our next one, we have Alphabet Inc. More commonly known as Google, with a market cap of 1.5 trillion and a PE ratio of 30. There is no dividend yield here, but like Andrew and me have both said many times already, that's not the main goal here. It's really the profit, the long-term growth, things of that nature. Google remains the leader in search and online advertising. Its investments in AI, cloud computing, and autonomous vehicles through Waymo provide additional growth avenues.
Yeah, Landon. I mean, Google, another one, right? Who doesn't use Google as their search engine? I know very few people that use other things. Like if you use Bing, you really need to get up to date, right? Google is definitely the market leader here. But looking at our next one, right? And like I said in the dividend video, if you guys did watch that, it is always good to diversify. So we've had a few tech, we've had one like retail. Now we have a financial institutions type of stock, right? And this is probably one of my favorite, or my more favorite financial institution stock. We have Berkshire Hathaway. So Berkshire Hathaway, great on the 5-year, right? Absolutely amazing 5-year. Even the 1-year, pretty nicely. And the thing with financial institution stocks, most of them tend to move a lot slower than tech and other things like that. It's just a lot less volatile. So Berkshire has a market cap of 750 billion, a PE ratio of 20, and they do not have a dividend yield. This stock is led by Warren Buffett, right? And everyone knows Warren Buffett, right? He's kind of like the top dog of the stock market. So great leader, really the guy knows what he's doing, right? And Berkshire is a diversified holding company that invests in insurance, utilities, railroads, and consumer goods. Its conservative management and broad portfolio make it a long-term bet that it will go up, and that's exactly what it's doing, right? Think about it. This guy Warren Buffett, right? Um, you know, top dog in the stock market. If he makes something, it's gonna be good. You know what I mean? So definitely a good stock to add to the portfolio here. I personally have it. I'm sure Landon has a few shares of it, right?
I mean, yeah, guys, there's three things that are for certain in life, death, taxes, and Warren Buffett's gonna make money, you know? So moving on to our next one, we have Johnson and Johnson. This is a different sector we haven't talked about, more of like the medical field, because at the end of the day, people always prioritize their healthcare because that's important to everyone. So Johnson and Johnson, they have a market cap of 450 billion, a PDE ratio of 15, with a dividend yield of 2.8%. Johnson and Johnson, it's a diversified healthcare company with a strong portfolio of pharmaceuticals, medical devices, and consumer health products. It has a long history of dividend increases and stable earnings.
Yeah, Landon. Johnson Johnson. If we do look at their chart here, we've seen some big gainers like Microsoft. That was what, like 400%, Apple 200, whatever. They're only up 12%. But the thing with Johnson and Johnson is, and if you look at Pfizer, I'll throw up a picture of Pfizer's chart on screen right now from when they, patented the vaccine for COVID. If something like that ever happened, like the increase on this would literally be insane. Like it would be absurd if they had a breakthrough like that. So we're really more banking on them having a breakthrough because they are a big company, right? And unfortunately, well, not really unfortunately, but Pfizer was the one who did find the vaccine. But I'm sure that there was people investing in those health companies during the pandemic, and that worked out great for them, right? So Johnson Johnson, definitely something to watch out on. But going to our next one now, we have PG or Proctor and Gamble. It's better known. It's more like a holdings, right? They make household products like Gillette, Tide, and Pampers. They own that, so that's like their their parent company is PG, Procter and Gamble. So looking at their 5-year chart here, they're up 60%, 19 on the 3 year, 12 on the 1 year, and on the year to date, they're also 12, right? So great numbers here on Procter and Gamble, and you got to think about it too. People are always gonna, need to, clean up for an interview, use Gillette products, Tide. I mean, I have Tide in my laundry room, right? I use Tide to clean my clothes, so it's things like that, that this company will always be there. And looking at their PE ratio, they have a PE ratio of 25, a market cap of 350 billion, and they also have a dividend yield of 2.5%. So all good around here at Procter and Gamble.
Yeah, that one's a beautiful long-term stock for sure. So moving on to our next one, we have Visa. I think everybody knows about Visa. They have a market cap of 500 billion, a PDE ratio of 40, and even a dividend yield of 0.6%. Although that is very small. Um, Visa is a global leader in digital payments, benefiting from the ongoing shift to cashless transactions. Its strong network and recurring revenue from transaction fees, they ensure a steady growth for the stock for sure. Looking at the chart, they're up what 70% over 5-year run. That's what we want to see. We just want to see that slow growth, and zero volatility. That's the main goal here.
Right, yeah, Landon, absolutely. And this is another financial service type of stock, but Visa is just a huge, huge, huge company, right? And this chart is very, very nice with very few dips here. It's just kind of very consistent growth. Um, so Visa definitely something to pick up and add to your portfolio. But looking at our next one now, this one is probably the second most risky one on the list, but it's for a reason. All right, it's Nvidia. They're innovators in the AI field. They make GPUs. They have data centers, and I've heard that they're even expanding into autonomous vehicles. I'm not really sure how true that is, but definitely something to watch because it's been in the news a little bit lately. Their technology is basically essential. There's nobody else really doing this like Nvidia at their scale. They have a market cap of 600 billion, a PE ratio of 70, and they also have a 0.1% dividend yield, which is literally nothing. But this is more for the long-term growth. And I know that the 5-year chart here is definitely going to be skewed due to their recent boom. But I mean, this is absolutely insane numbers, right? Looking at the 3-year here too, it's also just insane growth after, even the one day they're up, right? But Nvidia, in my opinion, will continue to rise. They did, I believe, announce a split where the volume splits. So if you're holding one share of Nvidia and they split, if it's a 2-to-1 split, the price halves and you get 2 shares. So that's basically how a split works. And whenever a split is announced, the price tends to rise quite a lot. If you've been watching our videos, you've seen that Nvidia broke the 1,000 mark a few days ago, and it's been holding up ever since, right? And especially with the announcement of that split, it's probably going to continue to go up, in my opinion. So do your research on the split before getting into this, because this is a very, very volatile stock, right? It moves a crazy, crazy amount.
Yeah, Andrew, I believe the reports are coming out saying it's a 1-to-10 split, so that's
Oh
that's
yeah, thank
pretty
you.
amazing right there.
Yeah.
But moving on to our next one, we have Tesla, with a market cap of 900 billion, a PDE ratio of 80, but no dividend yield. Tesla's a pioneer in electric vehicles and renewable energy solutions. Its innovative approach, strong brand, and expanding product line, position it well for future growth as the world kind of transitions to that sustainable energy. But more importantly, they're also a data company because their autonomous driving is so strong and has so much data. That's really where a lot of investors, why they put their money into Tesla, because they just collect so much data with their self-driving, with their cars. And I believe Andrew had expanded on this a little bit. Even the CEO of Nvidia was giving Tesla praise for how dominant they are in their sector of self-driving. So that's why I believe Tesla's for the future, um, a good buy-in.
Right, yeah, Landon. But one thing to watch out on Tesla is here is it is very, very volatile. So if you can't handle this heat, I would not hop into this. But me personally, I'm in it for the long term, right? I will, hold Tesla, and I believe they are trying to patent their FSD, which is basically just their self-driving software into, to be able to sell it into cars like Ford or Dodge or like things like that. So every car can have their level of technology, which would be great for them. I would love to see Tesla, transition into more of that than, just making cars so they can, broaden their horizons a little bit. But that's all for today, guys. Thank you so much for tuning into the trading table. This has been Andrew and Landon, and we'll see you guys tomorrow.